What's up, YouTube? How are you doing today? As price is moving towards the upside, or at least we're ranging for a little bit. But I hope you guys are good, guys and girls. Of course, Tim also here. Yeah, Tim is also here. Tim, by the way, he's a real life friend of mine. He's undoubtedly working at the moment with a 3-screen setup. So what's up, everyone? Please actually also let me know if the quality is good, because I'm currently on Wi-Fi and I don't have my internet cable plugged in because I was lazy. So if I have to plug it in, I will, but currently not planning to. Okay, there we go. So in this particular video, we will go over the different scenarios, of course, see what price is doing at the moment. Not too much has changed from my video in the morning, which is the reason I go live, because, you know, we can chat a little bit. I can maybe have a look at some other stuff as well, but mainly because we're still ranging at exactly the same place as this morning. I mean, even to be even more specific, we're literally at the same price as well as the video of this morning, because I recorded the video when price was over here at around 7 a.m. in the morning. And now we are basically at the same level anyway. So, of course, not too much has happened. We will run through the different Elliott Wave scenarios and the expectations, of course, and some more stuff. But in the hour that we have together, I will also maybe go over different things. A little bit laggy, but okay. Yeah, let me know, because else else I'm gonna plug in the internet cable. I got it behind me. But I actually completely forgot about it. I was having lunch and then I was like, oh shit, I don't have time anymore. But if many people experience some form of lag, I'll just plug it in. You know, it takes like a minute. But usually Wi-Fi should be good enough. So we'll see. Okay, so what are you up to today? What are you up to? It's already Thursday now, of course, one more day, and it's going to be a weekend. Also, everyone, tonight is news, right? 8 p.m. Central European time, the red flag over here. So whatever happens, make sure you trade safe around these hours, because volatility can kick in. Not that we are missing volatility, because of course it has been a nice volatile move towards the upside. Let's put you on the screen. Horizon Tech, what's up? How are you doing? Spot the Cambio as well. How are you doing? Good morning, Koens. Thanks as always for the top content. Always a pleasure. Bruna, I should say, actually, Bruna. Yeah, so Tim also here. Good to have you around, man. Kavin Kavya, what's up? How are you doing? Connection is good, a little bit laggy. Mondo Tav, hi ho. Good to have you here as well. Yeah, so let's jump into Elliott Waves, right? So currently, we are at resistance. It's the same target box as before, and it's always nice to see how respected they are as well. Tested once, nice move to the downside, and of course twice, and then the third time again breaking through. But what then happens? It's basically a straight line, and then we start ranging at the next box over here, which of course is very, very nice indeed. Now, based on what we've seen so far, and local price action, you know, probabilities are higher for you know, a little bit of continuation, but at least it's good to have a bit of a range here, right below the target box, resistance above 37.3 to 37.4, and then we get this golden box here, 38.5, 39k. The reason, by the way, and someone actually asked me, like, why is it gold? Now, first of all, it's a very, very old target box, right? We haven't visited this price for a very long time, and you can see that I have some other golden ones as well, and lighter blue, and then over here the darker blue as well. Like, these are all darker, even got a brown one here. Now in the past I used some different colors. I don't actually do that anymore, but this one remained gold because it's such an important level on the chart. And that has to do with the point of control of this range as well. So if I open the volume profile, then you can see that inside that big golden box is the point of control from the multi-year volume profile range over here, which therefore makes it an incredibly important support resistance area. Besides, by the way, the point of control being inside that golden target box, we also have the golden pocket in that same area. So if I take from the high to the low, a Fibonacci, that you can see that the 618 is right on top of the point of control, which therefore explains why this area for me is gold, because it is very, very big resistance, right? So you can see over here, the 618 point of control, they're both inside the target box. And there's a couple of other things in here as well. High volume node, weekly naked point of control, some other stuff that is in this area, which adds up to the confluence, of course, and eventually make this a gold box, because it's just an important area. And it also helps me to identify, like, okay, like, you know, this is, I know that the point of control is here. So even without putting it on the chart all the time, I know that this is the area where the point of control is, because it's a golden area. So very important area on the chart, which can also be a very attractive area for a retracement to the downside. And that is also, when we look at Elliott waves, a very interesting area indeed. Because if we look at Elliott waves at the bullish scenario, then you can also see that a potential target for wave 3, being the 4.618, is also inside this golden target box, right? And if you have been following my videos over, well, basically the past couple of weeks, really, we've been keeping an eye on the 618 here, 618, 618, and now the 618. So 1, 2, 3, 4, right? Important targets for a wave 3. 1.618 passed, 2.618 passed, 3.618 eventually passed. Could be looking then, right? Probabilities are high for the 4.618, which is also sitting in that same area. For then potentially that wave 3, after which we might expect a potential wave 4, or, and that is something that I've been potentially thinking about, that wave 4 is already in, and we might currently be on a wave 5 to the upside, but it very much will depend on how price reacts here and the move towards the downside, because of course this is quite a lengthy horizontal range, right? And then a WXY or an ABC running flat, which is fine. But en route to the upside, what you also see is that if this would be a 1, 2, 1, 2, and then potentially another 1, 2, 1, you know, there's many like 1, 2s here. So this range can still be a wave 4 of a lower degree as well. And we're still waiting for the wave 3 of a higher degree to finish, for then a 4 higher degree, 5 higher degree. What you can also see is that the 4 has now been hit. In general, my Fibonacci template has 1, 1.618, 2, 2.618, 3, 3.618, right? When I'm looking for the high of a wave 3, those are like the ones that I like to use, because they are very, very nicely respected. So that is why I also have the 4 on my chart here. And this is, of course, then the bullish scenario. Flotti also in the house, by the way. Mustafa Mood, how you doing? Flotti, good morning. How was your espresso this morning in Austria, in the mountains? Where do you live? Like, of course, not your address, but are you living in a mountain area, or you know, where exactly are you based? So when we look at the bullish scenario, we're of course looking for continuation, but continuation comes with retracement. So let's go through Elliott waves in a little bit of a more structured way, I suppose. Zoom out to the daily time frame. Let's use the 12-hour, because the 12-hour candle already finished. And let's actually attack the charts with a little bit more of a plan, starting with that volume profile. So I'm on the logarithmic chart. I will go to the weekly time frame as well, because the weekly time frame is usually too high to use linear scale, you know, especially with Elliott waves or analysis in general. I would recommend using logarithmic scale when you go above the daily. So this volume profile here, very, very important, right? Value area high, point of control, value area low, support resistance area, test 1, test 2, test 3, price moved above, very nice indeed. Close 2 candles here, en route to potentially hit that point of control. Now, as mentioned, that's also the area where the golden box is, right? It's very, very interesting confluence. And eventually what I am going to be looking for is, of course, a retracement, right? Like we can't just keep going. There's always going to be these retracements, just like we had over here, right? A corrective structure over here, move to the downside, got a nice, like, little bit of a pump to the upside, all nice. But eventually you're going to be looking for either a wave 4 and then a 5, or you have a 5-wave structure finished, and you're going to be looking for a wave 2 for then continuation to the upside in a wave 3 in the bullish scenario, right? That's the bullish scenario. That's the bearish scenario. That means basically, bloop, we go down, right? So in a bullish scenario, this point of control is also interesting for a retracement, and commonly price likes to retest these areas that it first struggled to get through, support or resistance, eventually coming back, support, and then moving towards the upside. So that could be an interesting level indeed. 31.3k is the value area low level, and the white box is 31.4k to 32.6k. Now, if you then zoom in the bullish scenario, we got the flat over here. Running flats are very bullish, actually, and very rare. You don't see these often, where wave C does not take the low of wave A. Zigzag A, zigzag B, 5-wave structure in C doesn't take the low. Running flat, continuation to the upside, confirmed as well with taking this high. Continuation to the upside, as shown, is then the double 1-2, where eventually we want to look for a 3, a 4, and a 5. And then, the question is, was this potentially your wave 4? Very, very shallow for that wave 4. If I actually change the fibs to the high and then drag it to the left, then you can see that at least the 236 has been hit, but it, funny enough, has been hit over here with a, I don't really want to call it a scam wick, but this is a wick that other charts do not have, but Coinbase has. So if you would look at the other pivots that charts do have, then the 236 has not been hit. A less common target, or I should almost say rare target for a wave 4 is, however, the 146. And of course, the 0.146 has been hit, but it's just in general not a target that you would usually really look at. But if I change my template here to a wave 4 with an extended wave 3, you can see over here the 0.146 is a target that you can keep an eye on, but that is very, very, very shallow. So what I would prefer to see, and what is by far most common, is a retracement inside this area. And by all means, the 382 is most common for a wave 4, which is currently sitting at, let me check if the fib is still at the right height. Yes, currently sitting at 32.9k. However, as price keeps pushing, and still interesting, looking for that golden target box eventually, that I think is a very interesting reversal area, 38.5, 39k. But eventually, we are going to be looking for a rejection, right? A bit of a range, stopping people out, because you can imagine how many people are leveraged long here with this move to the upside, moving their stop losses to the upside as price just continues. At a given moment, it would be nice to see a little bit of a waterfall, stop everyone out, and then continue again. But that is, that is something that can happen in a wave 4. Invalidation is clearly if you continue to the downside. More locally, over here, what I think is interesting is probably more interesting than my scenario here is the one that John shared in Discord. Let me actually get John in here. Let me actually find his scenario. So John here from Australia, he's a great Elliott Wave counter himself. And he usually counts on the very, very low time frames, and he also trades the very, very low time frames from an Elliott Wave point of view. But this is a scenario that he had. So let me open. And I think this is very interesting. And also, and I'll explain why this one, I think, works a little bit better at the moment when we look at how this double 1-2 shaped. I'll get to it in a second. But what you see over here, what John shared in Discord, is an ABC running flat again. You know what I mean? Over here in wave A, you already have a flat ABC running. Then you have a zigzag ABC in B. And then you have a 5-wave move to the downside in C. This is the end for C. And then this is your 1-2 continuation to the upside, right? Basically here, you have a double 1-2. and you move towards the upside. And the reason that I think that might, actually work better, so props to John, because I didn't actually thought about this. Hey, could this be a running flat in an ABC? But props to him to actually think about it, and he posted it today. So, it's of course a complex structure. Running flats in general are not actually that common, but can happen more often in a very trending market. So instead of then having this as a 1-2, and then, let's see, do I have this one? Yeah, so let's do this. Instead of a 1-2, 1-2, and then continuation, you have not this one, not this one. This is where it ends, and then an A, B, C. And this is your 1-2, 1-2, 3 to the upside. The reason this works nicer as well is when you think about the Elliott Wave rules that are important in this particular scenario. Because something I've been talking about quite a lot in the content is, well, this move to the downside here is very, very, very deep. If this is the end of this range, then a wave 2 retraces to the 886 even, close candles below the 886. Incredibly rare for a wave 2 to bounce on an 886, right? Most commonly it's a wave C or, a wave B or a wave X, meaning the move up is then a C or a Y, most probable for then another move down. Of course, we get continuation, but still lowers the probabilities this is a 2. So now the fact that John has like, well, what if this is a wave C and we end here? That makes sense, because then the 886 is out of the question, which I think is very, very nice indeed. And another thing is, if this is a double 1-2, preferably from an Elliott Wave perspective in a double 1-2, you want to see a diagonal structure. And then boom, right? This is a triple 1-2, where the second wave 1 takes the high of the first wave 1. And also preferably, the second wave 1 is shorter in time and price than the first wave 1, and the second wave 2 is shorter in time and price than the first wave 2, right? Now, if we remove this yellow count, and basically we are looking for this to be an ABC running flat structure, and what we can have more locally is over here a wave 1-2 in green, 1-2, continuation to the upside in then blue. There we go. And what you now have is, of course, this wave 1 much shorter in time than the green wave 1 over here, which is nice. And you do hit the 1-to-1, right? So this blue wave 1 is a little bit longer, but not on the line chart. And that is quite interesting as well. So I only use the line chart for this type of stuff. On the line chart, this second wave 1 is actually a little bit shorter. So that is quite interesting as well, right? So yeah, it's just a wick, but it works a lot nicer, because now the second wave 1 is then higher than the first wave 1. It's also shorter in time. This wave 2 is also shorter in time than the higher degree wave 2, which I think works very nice indeed. So thanks to John for sharing that. I think that is a very important little new bit of information that I can share with you, thanks to John, right? Because he's the one that actually found the count. So that then means, if do I have that count? No. Let me actually put it on the chart. We're then looking, I already removed it because I only look at recent. So this is then your ABC here. Voila. And then you have from the beginning to the low of A to the high of B, price hit the 1-to-1, right? Which is good, because over here, what you can see as well is the most common target area for a running flat wave C is between the golden pocket and the 1-to-1, which is basically where price finished. Another very common target area for a wave C of a running flat is taking a fib from the low to the high of B, and then it is between the golden pocket 786 area. Usually around the golden pocket is known. Around the golden pocket. So it works nice, and it also just works nice in the context of how price then moves now towards the upside. And then more locally, of course, we look for then a 3. This is of course micro time frame stuff, but potentially you have that 1, 2, 3, 4, 5, 4, 5, 4, 5, right? And you get a couple of 4, 5. So basically what happens is you are starting in a bit of a ranging structure, a diagonal structure, but most commonly you're also going to end in a ranging structure. And this is what people then call bear flag, bull flag, or, you know, like just volume slowly goes down here while price moves to the upside. Can be a sign of a couple of 4-5s building up. Usually when you look at an impulse, what you will see is you will see over here, as shown earlier. Let me actually a little bit larger. So you have 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5, right? So you have the beginning in like a diagonal shape or a channel shape, and then the ending is also like a diagonal or a triangle or a channel shape with the big push, the highest volume in the middle. So that is always something to look out for as well. So this works very nice indeed for then a running flat. Let me park this one actually in my folder as well. Keep everything organized. So yeah, you can clap for John, not clap John, but you can applaud John. His message is over here as well. I've already spoken with him all the time, but make sure you you know, if you see it, a little bit of an emote. I've been talking to him a lot today. So yeah, this is a bullish scenario that I'm not that keen of. I prefer the scenario that he has, which is this one over here with then a running flat 1, 2, and then this is how we're looking for a continuation to the upside, where in general, keep in mind that golden target box remains very, very interesting. This scenario, so let's see, that's basically like the bullish story, right? At the moment, and at the moment it doesn't make sense to really try and count stuff on the lower time frames. We can hear 1, 2, 3, 4, 5, 4, 5, 4, 5. You know, that's something that one can then be looking for. But as long as price is moving up and doesn't show any bigger retracements, it doesn't usually make too much sense to count everything in detail, because a wave 3 can extend very far. And it's very difficult to know where wave 3 is going to end. Next resistance over here, 37,375, 37,432, is actually only because of one thing that I have that level on my chart. And let me actually show you. Now, you guys know that I do like gaps for the ones that watched the morning video, or I should actually say for the ones that watched the video yesterday at 1 p.m. because I couldn't in the evening because I'm a global keynote speaker. I had a speaking event yesterday, but price bounced very nicely on the gap. I'll show that in a second. So on the weekly time frame, log chart here, right? This candle is the high of a bit of a gap here, as you can see. And this one closes that gap. It's the high of the gap. And that's the only reason why I have a blue target box above where price is now. It's also the only resistance, as commonly price likes to react after it fills a gap like this. It likes to react, which is the reason that I have a box here. But, you know, cross that, and you know, probabilities are high basically if you move above this white box now to then eventually look for the golden box. But at least you know what the resistance is that I have in that area. You know, it's just so you have that little bit of information. Okay, we're going to zoom out again, look at the bearish scenarios, because as an Elliott Wave analyst or a trader in general, you should be as neutral as possible. You can have a bias towards the upside or the downside, but you should not let your emotions run into, we go to new all-time highs, right? That's very dangerous stuff. Or we go to here at the bottom, oh, we're going to dump, you know, Bitcoin is worthless. We're going to go 5K, 4K. We're going to take the COVID low. You know what I mean? You got to remain neutral at all moments, and therefore also look at scenarios to the both upside and the downside. No? So towards the downside, however, things are looking, or things, the scenarios have a lower probability at the moment. Let me extend this a little bit. For an ABC, for a flat three-wave structure, 335, the 1.618 is already a less common target for B. This is the common target, which we passed, right? With strong bullish CVD divergences building here as well. 1.618 has been passed now as well. Close a candle up here. We already closed a 12-hour candle up here. Really reducing the probabilities. This is a B. Much higher probability. This is an impulse for higher prices to come. ABC is the subwave scenario of a potential AB bigger C down. But also now we're moving above the 1.618 for a target of wave C. Again, lowest probabilities. This is a 3-waver, increases probabilities. It's a 5-waver, but of course that is stuff that we have been talking about for such a long time already. On the higher time frame though, and this is something I usually don't really do in live streams, but I think it is relevant, we are going to encounter very, very strong resistance on the macro. Usually I only do this on Sunday night. Let me find the scenario. Here you go. Point of control, right? Golden pocket, the golden target box. Okay, 39, 42K, just in general, golden pocket area. Very, very important indeed. But also for an ABC, when we look at a 3-wave structure, and I turned log off here for a second because the 3-waver is on a daily or 12-hour time frame. If your wave A and your wave B are finished, the most common target for wave C is here, which is again between 40K and then over here 44K. 40K in confluence with the point of control and the golden pocket. So there is still, that is the high time frame bearish scenario, ABC and a move down. At the moment, there's no reason to think that is going to be the highest probability scenario. We simply have to wait and see how price is going to react in this particular area, and then we take it from there, because the lower time frame Elliott Wave scenarios are going to show us what the highest probability is on the higher time frame scenarios. Now on the high time frame, meaning daily time frame, this is the both bullish and bearish scenario, highest probability, A or 1, 2 or B continuation in wave 3, or a wave C. The target for a wave C is shown here between the 1-to-1 and the 1.236, taken from the low to the high of A to the low of wave B, sitting between 40K basically, right, and 44K, 1.618 sitting at 50K. 50K is very important resistance as well, because on the higher time frame, on the macro, the 50K level is the 786 in confluence with the value area high of this very, very big volume profile. So we also have very important resistance there. So it's basically those two main areas, right? 39 to like 42, 44K, and then eventually you go 48, 50K. That's the next step towards the upside. When we think, of course, about the bullish scenarios. And on the high time frame, that is a potential wave C target, but 50K is preferably a wave 3. Now also, when we look about or look for an impulse, if we are in a wave 3 to the upside, of course, first of all, we want to see an parabolic impulsive structure, which at the moment it's doing quite well. We want to see volume increasing. We did have a bit of a volume increase, but you know, it's not yet amazing compared to what we had previously. We also have a bit of a dip, so price making higher highs, but it's doing so on lower volume at the moment on the daily time frame. But you want to see strong continuation for a wave 3. But a wave 3 can also result in 1, 2, 1, 2, and then you get your 3. And this is something that I think is going to be interesting, because price likes for, you know, when you're in a wave 3, price always enjoys to find resistance inside the wave C target area to then move in, reject inside the wave C target area to move to the downside. And then you get the scenarios online, of course, which I have as well. Hey, is this going to be an ABC? And then we move down again to much lower prices, bearish, or 1, 2, 1, 2 continuation to the upside. And this is where time is going to play an important role as well. Commonly, wave C is around the same time as a wave 8, which is the reason I have the 1-to-1 here with a date of the 2nd of February 24. Important area or important time for a potential wave C. But you can see we're already quite close to the target area, and we're not even close to the time, right? Increasing probabilities that even if you reject here, it's a potential another like 1, 2 to the upside. So you're going to have a 1, 2, 1, 2 continuation based on time analysis in Elliott Waves, which is very important, because Elliott Waves is not only price related, it's also time related. And if we then open the boxes, right, then wave C is even a little bit higher, but that is okay, because what we are looking for with the, with the double 1-2, and this is messy, I realize it is messy. What we're looking for here is potentially then a wave 3 to end, then a wave 4, then get a wave 5, and then you reject, right? So that is when you have either a second wave 1 finished in a 1-2, 1-2 continuation, or you have your wave C finished, and you're going to move towards the downside for lower prices to come. So, and again, local price action will give us more information about what is the highest probability in that particular perspective. So if we then zoom in finally before we go into chatting, because then the educational bits and pieces are finished. This is what I spoke about yesterday. Price, first of all, by the way, remember the video where I said, I was cooking, which was down here. Very nice. Got that move towards the upside, which was the highest probability. Reason being, this moved down too slow, right? Wasn't impulsive enough, high probability to move up. Got that move to the upside, bullish CVD divergences, and price left a gap on the 15-minute time frame. I had this level on my chart for a while, the key level. It's the low of this candle, which is not necessarily that important. More important, it's the beginning of this gap, right? Very, 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 very often, once you have a gap like this, it reacts. You at least see a support, and preferably in a bullish scenario, you want to see continuation, right? And that is what happened. Or in a more, still bullish scenario, you find support, you come back, support again and continue. But the moment you close candles in here, bearish, right? Downside. But hey, we moved right on top of this level, moved towards the upside. Very nice indeed. Price is not looking back, moving to the upside. Went through the target box, third time of resistance. The more often you test resistance, the weaker it becomes. And now we are at the next resistance level. And I made the target box wide already because we have basically been ranging against this area now. If you look at the CVD divergences, there's currently nothing really going on. Had some bullish CVD over here. Higher low in price, lower low in yellow, already played out. Also in blue, by the way. But that already played out, so it's pretty much a neutral playing field. And of course, this white box can now also act as support, right? So yeah, and this, by the way, box is sitting between 35.9, 36.2K, which can now then act as support, as mentioned, for then continuation. But yeah, we're at resistance, basically the same price as this morning, which is one of the reasons I went live, just to summarize all of the different time frames and go back into chatting with you guys. So what is up? What is up? Oh damn, I don't have any water in my bottle. 1 second. Haha, got multiple bottles. Hoppa. Okay, so what's happening? Justin Chu, how you doing, man? From Malaysia. Zooming in as well. What's up? How you doing? Red and Black Poker, or something like your Discord name. Quite different from your YouTube name, of course. Sikkim MLBB, shorted Bitcoin at 36,900, stop loss 3,700. Is it okay? It's okay if you follow your plan. It is not okay if you don't have a plan and you have no idea. So, no financial advice. You need a plan, you need a strategy. You need a plan and strategy that is based on statistics. Find your favorite tools, build statistics, put them together, build more statistics, and then the rules will come. And then you also build statistics on what is my most hit take profit? What's my best risk to reward ratio? How far should my stop loss be? If it is like 0.5%, 1%, 1.5%, 0.7%, how many times does it get hit? All that data will get you a strategy, which then means you're not going to ask these questions anymore because you know exactly, based on statistics, what's going to happen over a long enough period of time. You don't know if the trade is going to be a win or a loss, but you know that based on statistics, backtesting, forward testing, and all the data you collected, that over 100 trades, you're going to be profitable with your strategy, which therefore means the uncertainty, or I should say this differently, which means that you don't have to ask other people if something is okay because you know it is okay. And the only way to get that confidence is by building statistics, building a strategy, building a plan, which is also an important focus that I have, helping people to develop a trading plan and a strategy. They don't necessarily have to trade my strategy and my plan because it might not work for everyone. Because a plan is very personal. You might not trade the same way as I do because maybe you don't have enough time, you're not as patient, you want more setups, you're a scalper, you're a swing trader, you have a different risk appetite, whatever it is, it might not work because of your personality, your way of life, your lifestyle. So it's, in my opinion, the best someone can do is develop your own trading strategy, and this is what most people do not want to do. It's very simple. Most people do not want to put months and months and months of work into gathering statistics, which then leads to these type of questions. Egyptian UFO. If the bottom is in, can't count the waves from the bottom. Did we finish wave 1 in 5 waves and just started wave 3? Yes, but as mentioned, it can be a double 1-2 because currently the volume is not that great just yet. So personally, what I am in a bullish, so in the bullish scenario, right, what I'm then looking for is a double 1-2 scenario, right? So you have your wave 1, your wave 2 of a high degree, then you have a sub degree wave 1, or well, a little bit higher actually, to like 30, the point of control area somewhere here, 39, 42, 44K. Then you reject for another 2, and then you continue, and then you go into a wave 3 of 3. That would be the bullish scenario that I'm keeping an eye on at the moment. And not to forget, 1, 2, 1, 2, and the next impulse to the upside also starts with another 1, 2. So you might get a couple of like 1, 2s in a row before you get the big push, right? The more 1, 2s you get, the more impulsive the next move should be. Salut, J Moab. How you doing, man? How are you doing? Good evening. Chili man, it seems like the move up from 25K was literally on the low probable or rare uncommon move pattern structure. From 25K. Oh, that was the lows, the running flat. Yeah, that is correct. You are absolutely correct. And the main reason for that is the running flat scenario. It is something that we were thinking of, but it's in general less common to have a running flat. So what you saw me do when price was moving to the downside here is we were thinking about a flat structure, which is, the first thing you're going to be thinking is a flat. After this high is made and you're going to move to the downside like this here, the first thing we were looking for is a flat, an ABC. But most commonly, price likes to go to lower prices for an expanding flat. Second most common flat structure is a regular flat. You take the high of A, you take the low of A, and then you continue to the upside, which is more of a sideways structure. And the least common scenario is a running flat where wave C does not take the low of wave A, and in this case, it forms a double bottom. So besides the running flat scenario, we also had the zigzag, remember? A potential ABC, because this was a 5-wave structure quite clearly. So either it's a running flat or we're thinking about an ABC where this is the high of the impulse up. So either this is your high and then you have a running flat, or this is your high and you look for an ABC. But the problem, which we eventually encountered in an A, B, and then a wave C, is that once price started to take these highs here, it became really low probability. And also, the moment price came down here in an ABC structure, this was not really impulsive enough to be a wave 3. Bullish divergences over here as well, even more locally on the 15-minute. The moment price started moving up, that is when the probabilities became a lot lower for an ABC zigzag and increasing for the flat, right? Because we were looking for this flat for a very, very long time already when price was moving down. But a running flat is not common in general, which therefore means you have to first invalidate the zigzag, or the zigzag has to become lower probability so that the running flat gets higher probability. And the moment we saw bullish CVD here and price moving to the upside, that was the moment where the probabilities switch from an Elliott Wave perspective in a sensible trading way, because no one knows what price is going to do, right? It's all probabilities, and probabilities are constantly changing based on new information. But you're absolutely correct. Absolutely correct. Erhan Iren, hello. Good to hear your comments. Very helpful. Thanks, man. Good to have you here again. Nice to see you. Gabriel, how you doing? Should be 38.7k. Retrace 33.8, then 42, then 32, then 49, and finally 11. That would of course be the bearish macro scenario, yes, where you go back to like 8 to 11, but that's the bearish scenario. Of course, in the bullish scenario, you have the same steps, but you push through 49 to new all-time highs, of course. So basically what he is saying, just to put it on the chart, right? So let's see what you started with 38.7, right? 38.7, 33. Yeah, so you move up, right? 38, you move down 33. A wave 4, by the way, of a higher degree. So if let's put this back on the chart, remove this here. 1, 2, if we can end wave 4 somewhere here, right? Around 38, 39, 40k. A wave 4 of a higher degree likes to end around the wave 4 of a lower degree, which would be nice, because then you have a wave 3. Now, if that wave 3 ends somewhere around 38, 39k, like somewhere over here, then you can see the target moves to the upside, right? Which is exactly what should happen. Ta-da. And what is nice is the 382 is common for a 4. The 382 is bang on top of this range as well. The 05 is very nicely positioned at the low of this range. So then, yeah, 3, 4, then you move up, right? For then a potential wave 5, like you say. After 5 waves are in, you move back towards the downside, corrective, where you said 32k, which is then somewhere over here. Yeah, I mean, possible. Again, potentially support resistance of this piece, which could be interesting. 3, 4, 5, and then over here, you have support resistance on top of this range before then your continuation to the upside, and then it depends on on the macro bear or the macro bullish reaction, of course. But of course we do so much on the channel, like there's so much content that I post here that we will see what happens, right? We take it step by step, and we'll see what happens if over here price is going to make a 3, and depending on the move down, we can look for a 4 or a 2. It depends, right? We'll see what happens. So, but yeah, it's currently the thing to look for, no? Live close to a ski area, Kaisersmarren and Après-Ski. The Red Bull Ring in Spielberg is very close. Ah, do you sometimes go to Formula 1, Flotty? It's a nice circuit, beautiful area as well. Kaisersmarren. Oh, I haven't had that for a very long time. I haven't actually been snowboarding for a while. I do like snowboarding. I used to be a snowboard teacher, by the way. I've taught snowboarding for, I think, for about, was it 2 or 3 years? Can't remember. It's quite a long time ago. Also, Tim. I don't know if Tim is still here. Tim, this guy here, Tim Boerboom. So I worked at a ski center as a snowboard teacher, and I got Tim, because Tim is a real life friend of mine, and I got Tim a job at the same center as a teacher as well. So we were both teaching at the same center. Would you recommend general admission for the race day at Spielberg? Oh, there you go. Formula 1 questions popping in. Yassir Ali, how you doing? Tony, by the way, race fan as well. Oh, we go to Vegas now. Let's see what happens there. Fad and Z, ciao dude, how you doing? Sorry, Yassir, message retracted. He remembers. Yeah, the good old times. Yassir Ali, why is it difficult to understand corrections? Any guidance about understanding a correction? The main reason why corrections are generally experienced as difficult is because there's so many different corrective structures. So, quite clearly, if I'm on this time frame, if you look at this chart, right? If you look here, if I zoom out, go to the daily, you can clearly see, like you don't even have to think, right? You can clearly see what the impulsive waves are, no? It's very obvious what the impulsive waves are. Of course, it's also obvious what the corrections are. In hindsight, it's obvious. because counting corrections while they are happening is very, very difficult, because there's so many different corrective patterns. So it takes a lot of skill to know which pattern has the highest probability of playing out. Now, in general, you do have probabilities where a wave 2 tends to be simple, short, and deep. Think about zigzags. And a wave 4 tends to be long, shallow, and complex. Think about a WXY, a flat pattern, or a triangle. Now, with that in mind, if you're now thinking about, hey, we might be in, for example, here, a wave 4, okay, might need to start thinking about WXY triangle or a flat. So you're going to observe what happens here, right? If you think about a wave 2, I might be looking for a zigzag to the downside, an A, B, C, which is what we had over here, right? So, and also in a wave 2, you can get a flat in a wave 2, right? You can get a flat in a wave 2. Absolutely possible. So there's a lot of different corrective structures, and in general, these are the ones, right? Zigzag, 535, labeled as an ABC. Then you have a flat, expanding flat, most common, also labeled as an ABC. Difference is, this is a 535, this is a 335, right? Besides a expanding flat like this, you also have the running flat, which is a pattern like this, and you have the this is a regular flat, and then you have the running flat, where wave C does not take the low of A, and you continue to the upside, bullish, right? Now, besides a zigzag, you also have a double zigzag, which is this, and then a W. Then you have a three-wave X, most commonly an X is also a zigzag, and they have another zigzag to the downside, creating a W, X, and then a wave Y. Now you also have a triple zigzag, and then a W, X, Y, X, Z, just, you know, copy-paste another zigzag after your W, and then X, Y, and then eventually you get another X, and then another zigzag to the downside, right? That's another XZ. It's quite rare to have that. So you have the zigzag family, you have the flat family, but then you get the complex family, right? Which consists of, besides the WXY I just mentioned, usually complex structures are sideways horizontal structures, labeled as then a WXY. You have the sharp WXY and the sideways double combo WXY. In a sideways double combo WXY, wave W can be only a zigzag or a flat. And if wave W is a zigzag, wave Y cannot be a zigzag. So wave Y then has to be either a triangle or a flat. If wave W is a flat, wave Y can only be a triangle or a zigzag. Wave X can be any corrective structure, but is commonly a zigzag. And this is where things, of course, then become difficult, because now you get a very drawn out, longer horizontal corrective structure where actually the core structures, a zigzag or a triangle or a flat, is not the only pattern. It's a sub-degree. So W, a flat in wave W, a flat by itself is a corrective structure. And then after a flat, you could get another impulse. But based on the move to the upside, you have to think about an X or an impulse, right? And this is where things start to become complex as well, just like we had over here. It really depends on the move to the upside. And this is where the experience kicks in as well, because over here, right, A, B, C, this was a flat. But this move to the upside, this was a flat here, a running flat, A, B, C. After this is in, we could have seen continuation, but we didn't. It wasn't impulsive enough, a lot of overlap, right? And then you get this very sharp move, but a wave C fitted best, and eventually you get the move down. So, yeah, and then of course you have the triangles, right? A, B, C, D, E, poof, and there's different triangles. You have the barrier triangle, right, with a flat bottom and a top like this, or the top is flat and the bottom goes like this, right? A, B, C, D, E. And then you either move down, or A, B, C, D, E, and you move towards the upside. No. You have the contracting triangle. You have the expanding triangle. No. So there's many, many different variations. And the lower time frame you go, the quicker things change, right? The chart is changing a lot all the time on the 50-minute. Which is fun. You know, it's fun as well. But you know, it depends on what you like. You can use Elliott waves on higher, lower time frames. On the higher time frames, it's a bit easier because things go slower. Yo, Liquid Mafia in the house as well. What's up? Liquid Mafia posts a lot of charts. Looks like interstellar charts. He posts many charts in Discord. I wanted to write chart. He posts charts in Discord that have always circles, interstellar themes, like this circle, Fibonacci circle analysis. Or I don't even know the exact time, but you know, he posts these things with like scenarios and stuff. It's incredibly interesting as well. So yeah, check him out in Discord if you aren't if you haven't yet, and check out the posts. Always interesting. Good to see you, man. Why is there so much subjectivity in Elliott waves? That's a good question. I guess subjectivity equals the experience and knowledge of the user. Because the better you become in Elliott waves, the less subjective it becomes, because you have more knowledge of the exact rules, and based on volume, time, and price, you can have very high probability Elliott wave scenarios, which then reduces the subjectivity. But when you just start in Elliott waves, and I've been there as well, right? I've been at the beginning. I made many mistakes, and even when I was right, I wasn't right, because this is something that happens quite often in Elliott wave YouTube, which is one of the reasons I made my channel. People tend to not stick to the rules, especially triangles and stuff. You know, some people, oh, they draw triangles anywhere, but it's not. It's a WXY. It's not a triangle. But anyway, you like the subjectivity comes with learning about the rules of Elliott waves. The more you know, the better you become. But sometimes what happens, and this is actually, you know, quite painful to see, is, do I have an example? I'm thinking about a WXY and an ABC. So if you have a WXY, right, sideways, and you have an ABC, then what you see sometimes is people start to label this over here a WXY, but the subdegrees are wrong. The result is quite similar. The result is quite similar, but it's a wrong count, right? It's not correct Elliott waves. And you see this very often with triangles, because a triangle, right, has very strict rules. You have a zigzag A, zigzag B, wave C, D, and E can be more complex, but 4 out of 5 waves need to be zigzags. The danger of a triangle pattern on a chart is that many people are going to draw a triangle, but it can be also a WXY pattern. And then you get fake outs, usually on both sides, something like this. And, you know, people see the triangle, but it's not a triangle. And you know, sometimes that's the danger of Elliott waves, is you got to be very good on the rules, and the better your rules, the less subjective you become. I think the latest, I kind of remember, I think this was, let me look here, triangle. Oh yeah, oh yeah. This was the latest double fake out triangle over here that I posted. So yeah, played out very nicely as well. So people looking for a triangle, but instead I was looking for an ABC to the downside, which played out indeed very nicely indeed. So yeah. Be aware that sometimes in Elliott waves as well, you can be correct with the direction, but your count is wrong. And the problem is that you install a wrong habit. The most common one is using wrong letters, WXY and ABC. Not sure what to use. A WXY is a 333. Inside a W and inside a wave Y, you can't have another WXY. It can only be ABC structures in a wave, or in wave Y, ABCDE for a triangle. But it's the rules. The better you know the rules, the less subjective it becomes. But in general, Elliott waves, of course, is always evolving. So there's always some form of subjectivity. And personally, my trading strategy has a lot more entry requirements to also completely remove the subjectivity and really trade based on rules, like fully rule based, like as little interpretation as possible. Samith, how you doing, man? How's the trading going? You're banging. I would say a running flat. Could it be at an end right now? So already at 5. Of a lower degree, we are at resistance. So now that we're here, you can see as well, raging to the upside. What the volume is going down. So yeah, absolutely. And we are at resistance as well. We know support, we know resistance. Let's see what happens, by the way, here. Still nothing going on. I mean, high, low, high, low, high, low, higher, high, 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 higher, high. You know, nothing has been, market structure isn't broken yet. And general expectation would still be for price to continue. But on a lower degree, everything goes in waves, right? 1, 2, 3, maybe 4, 5, 4, 5. You know, you eventually get a couple of 4, 5s. If we pull a quick fib here, oops. From this low to this high. Okay, the 1.618 is 37.4. Now we also have a target box there. But yeah, general probabilities on the, you know, when you zoom out, not on like a 15 or, but in general, higher probabilities to still have more upside. But of course, everything goes in waves, goes up and down. Hey, bro. How are you? Do you think Bitcoin will go higher? I mean, of course, there's no certainties, but probabilities would agree. But again, everything goes in waves, up and down, right? Make sure you go to the beginning of the video, because I basically, in about 20 minutes, went through the whole analysis from even a little bit of weekly, but daily chart all the way down to more local price action and the probabilities there as well. So of course now we are at resistance. So it's very simple. I'm not a financial advisor. You have your plan, you have your strategy. If you think this resistance is a very good idea to take your profit, close your trade, or maybe enter a trade, it's all going to be up to you, no? It's all up to you. You click the buttons. I just, you know, I'm just a random guy on the internet that enjoys making videos that hopefully people find useful for educational purposes. Based on FIB time, when do you think that the 49K top will be touched? Should be around February based on my analysis. Oh, Gabriel, you're the, okay, yeah. So you were the one that, of course, spoke about the bear macro scenario. From the low to the high to the low. I mean, the one-to-one here is right about the end of January, early Feb. So yeah, early next year, Q1 potentially, if you're going to look at this. But preferably, if look in a bullish scenario, right, in a 1-2-1-2, preferably the second wave 1 is a little bit shorter in time than the first wave 1. So you want the high to be made preferably before the 1-to-1, while for a wave C, it's more, the 1-to-1 is more important for a wave C than for a second 1-2-1-2 and then move up next year in 2024. So I still can't, like, I can't deny, and this is not Elliott Wave related at all, but damn, the liquidity here and the fear that can happen if price would move down in some scenario. At the moment, it's low probabilities, right? Probabilities are higher to continue, but after hitting that big resistance, we observe, imagine a proper move to the downside. The fear will add liquidity. That would be very nice. So yeah, Gabriel, I agree. But of course, for a wave C, the one-to-one is more important than for a second wave one, because you preferably have a shorter second wave one. Prema Shankar Tananjay, hey, new over here. Welcome, first of all. Thanks for being here. I've been watching your videos one by one, and it's great. Keep it going. Thanks, man. Thanks for the support. I appreciate everyone here watching the content, of course, and hopefully it provides some value. Like I always say at the end, right? Thanks for, of course, I say I hope this video was helpful or valuable to you, because that is the goal. Like besides providing an update, also providing some education at the same time, talking about where do I pull the fibs from. What is preferably a 112, right? What is rare? What is common? And all of this information hopefully is then also used by people, not used in making trading decisions, but used as in you're learning more about Elliott Wave so you can implement it yourself. That is a goal. So besides just providing updates, it goes up or down, go to the moon, boys. This is, of course, more theoretical, more precise, always a neutral bias, and hopefully more educational as well. Contrarian, what's up? How you doing? How are you doing? Card Crypto as well. Contrarian, smash that like button. Thanks, man. Silver badges, by the way, I see. Look at you go. Look at you go. Samith Gold now. Jeez, time flies, guys. Thanks for the support, eh? Time flies. Incredible. Liquid Mafia, how is your fib-based time going for a wave 2 or B? How is your fib-based time going for a wave 2 or B? In here, locally, you talk about Liquid Mafia or the higher time frame? So you mean a wave, if this is your 1, 2 continuation. Oh, by the way, I can answer this probably without. So for a wave 2, right? If you have a wave 1 to the upside in 5 waves, and then you have your wave 2 continuation, most commonly a wave 2 will retrace to after the 0.382 fib time, and most commonly 0.618 to 1-to-1 or the 1.618. These are also the ones that you see on my chart most of the time, like one of these 3, if I use fib times. Because this is the most common area for waves in general, but there's many. Each Elliott Wave scenario has its own little changes. For a wave 2, most commonly, the 0.382 is a minimum time retracement. Most commonly, you go between the 0.618 and the 1.618 for a wave 2. A wave B. And that is also an interesting difference. Wave Bs tend to be longer. They can be very short, by the way. But a wave B usually is a little bit longer in time. This here was a wave B as well. So if a wave 2 becomes very, very long, like way longer than the 1.618 or the 2 or even the 2.618, probabilities increase for a wave B. But most important is if you have a 1, 2, 3, or you have an A, B, C. The most important thing is the difference between C and 3. That is the most important thing to look for, because a wave C can also be quite quick at times, quite impulsive, like we had over here. This was a wave C, right? And it's the structure that matters, the structure between a 3 and a C. It's the same as over here. Instead of like potential was a 1, 2, 3 down, or an A, B, C and up. And then it's about the structure. And we saw a lot of overlap here. Price grinding slowly to the downside, not really any particular volume coming in, right? We have constant bullish CVD divergences as well. It really increased the probabilities for this then to be a C. And then we saw local bullish diffs and off we went. So yeah. Hey Koens, is there a reason why you don't have... Yes. Yo, what's up, Daniel? Is there a reason why you don't have the market value showed at your FIB levels? Yes, there is. Because it makes the chart feel more messy. And I hate messy charts. I'm very structured. I like a very clean chart, clean environment. So I prefer... And also, I'm not interested in the prices because I can see the lines, right? I prefer to quickly have a look. Okay, around 38. Okay, the 4 here. Yeah. Oh wait, I'm still on log. So yeah, I don't use the prices because it just adds something that I don't need on the chart, and it makes it feel, I don't know, it just makes it feel more messy. You know, it's not really my vibe. So that is why. Oh yeah, this was an interesting one, eh? Santiago, right? Thanks for notifying me. Also, again, in Discord, Santiago wrote a message in general here. Where is it? Oh, here. Santiago, I wonder if you've seen similarities with this piece of price action here. So that is where I got the bars pattern from, for anyone curious. Interesting. It's of course, you know, price doesn't repeat, but it does rhyme. No, probabilities haven't changed since this morning. Bring on the 4.618. Yes. Largo Caballero, what's up? Thanks for your comment in Discord as well. Funny to see how excited you were as well about the bounce that we had over here, which was very nice indeed. We were off by, let's have a look here. This candle low was 35103, 35114, $11. Not bad, not bad. Yeah, not bad. Yeah, it's just I like a very clean environment. That's also, of course, what you see is I use the object tree over here. I have all my folders. It's very structured, but it also helps me to communicate Elliott Wave scenarios a lot better to everyone watching. For the ones that are, by the way, here, go to the beginning of the live stream for the whole analysis part, about like 20 minutes, where I went through daily, even a little bit weekly, all the way to local price action, with some new information in there as well. So make sure to, we're now in the chatting phase of the stream, basically, right, where we just chilling. So yeah, I like to keep the chart clean, and it also helps with communicating scenarios to everyone. You know, it just, I don't really have any 15-minute stuff going on. If I zoom out, let's see, this one is now wait, I thought I removed this one. I didn't. No, I did. I just like clean charts, so one scenario at a time. What I really dislike, if there's multiple scenarios on one chart of different time frames at the same time, right? Like, yeah, it becomes so messy. Like, there's so many lines on the chart, and then someone has a box here and a box there and a box there and a box there. And there's like 100 lines, and there's like 5 different 1, 2, 3, 4, 5 counts. And sure, man, I can't like I can't look at it as well. You know, I need very clean charts, a clean environment, a clean working space, you could say it as well. And it helps to communicate scenarios a lot better, because people can follow the scenarios a lot better because of going through one scenario at a time. So people really understand where I'm at and what I'm looking at, you know, instead of having multiple on the chart, which makes life very easy for both the viewer as well as for myself. So yeah, it's a win-win on both sides. Macro, sorry if you did it at the start, I can rewatch. I was looking at a leading diagonal from the lows. Tim is back. Yo, Tim, just now I mentioned that we were both snowboard teachers. How long ago was that we were both snowboard teachers? I think we're talking like 2016 or something. 2015 maybe. That I was, yeah, I don't know exactly. When we were both teaching. On the macro, leading diagonal from the lows. Wait, did you share that by any chance? I see. Okay, let me put this on the chart for a second. Okay. First of all, from the low to the high to the low, you pull a fib, toggle on the wave 3 contracting diagonal target, almost at the common target area, which is this area over here. That is your invalidation. 1, 2, 3, 4, eventually wave 5. Wave 2 is very, very shallow though for a diagonal, and that is lowering the probabilities. So for a diagonal, most commonly the golden pocket to the 786 area. So the 05 is a less common target for a diagonal wave 2, but it bounced on the 382, which is very uncharacteristic for a diagonal for a diagonal wave 2 basically. So that lowers the probabilities of a wave 2, or actually this scenario being a diagonal. But we can continue. Yeah, so we just pull trend line. We are then looking, of course, for a high to be made somewhere here, 38 area. That sounds about right. And then we go wave 4, contracting. Common targets are colored. 382 and 05 most common. Golden pocket less common in a wave 4 of a contracting diagonal. 786, 886 rare, 236 rare. So you can see that a few things are changing. Now, if price moves to the 886 here, which is about 38.7, the 05 is right in, at the same level as a basically support resistance area, right? Which is nice on the high time frame, by the way, which I keep talking about. Up, down, retest the value area low on the high time frame and the support resistance area before another move up. Interesting. But yeah, you're then looking for a deep 4. 2 only went to the 382. Again, lowest probabilities, but we just go with the show, right? So, all right. And then eventually we have a wave 5 to the upside, of course, which has to end somewhere. Let me quickly check fib times here. It's quite a short wave 3 for a diagonal compared to the wave 1. Now eventually we expect a wave 5, and after then a wave 5 is in, we of course then look for 1, 2, 3, 4, 5. Let me actually check if this is what you had. Okay, yeah, I see. So this is not a scenario I have in my folders, but it's fun to have a quick look at it now. And then for wave 2, after your wave 1 is in, first of all, after a diagonal structure, again, it's not really something that I'm looking at the moment, right? It doesn't have the highest probability at the moment. First of all, we need 3 in, 4 in, and after 4, you want to have overlap with wave 1 for wave 4, which means that price has to at least retrace to 31K for a wave 4 in a leading diagonal. which is of course a deep retracement, as that means price has to basically, well, the 05 golden pocket area. If it goes to the 886 here. What did I want to say again? Oh yeah, wave 2. When we think about a leading diagonal on high time frames, they are less common than on lower time frames, which is something we should keep in mind as well. We want to see volume decreasing as well. Well, at the moment, the volume here is not spectacular. And after a diagonal, you always expect a deep retracement for a wave 2. So we then take a fib from the low to then the high of 5, right? Let's say about, what, like 43, 44K-ish, no? Then we toggle on the wave 2 targets, drag them to the right. Common target area, 05786, gives you, well, basically 29.5, 21.5. And time-wise, you're going to be looking for, you know, whenever the, where should it? It's going to take a while. So let's say 1st of April, double click here. 382. You're going to be down here like Q3, Q4 of 2024 in a diagonal. Before then a move to the upside. Wave 2 again, very shallow, right? Wave 2 is shallow. We got to keep that in mind. High time frame diagonal. And preferably, you also want overlap with wave 1. So if this is a 3 and we look for a 4, you want to see it go deep. It has to overlap wave 1. And after a wave 4 is in and we go up for 5, that is when I might put a diagonal on my chart. But now currently probabilities are higher. We're in a double 1-2 scenario for upside, or this is in a bearish macro, an ABC, and then you move down. So the diagonal is not necessarily at the moment something I'm looking at, but I do like the idea. You know, it's interesting to put this on the chart, talk about it, have a look at it, because it is, of course, still an Elliott Wave pattern, but it's all about the probabilities. But yeah, based on the analysis, this is it then. Yeah. All righto. Thanks. All good, man. All good. Have you heard of Chart Champions? I was searching for NPOX because of that channel, and I found your videos. Well, good you found my videos. I'm familiar because I know the bigger channels in the scene. But you know, anything NPOC related is very well known in the whole industry. So it's not like one entity. I think daily naked point of controls or fibs or anything, you know, it's already there for decades. So I heard you say it. 2011, we were snowboard teachers. So around 2011, 2012, more than 10 years ago. Shit, let's quickly actually see. I quickly want to see if I can find a let's see if I can find a picture of myself teaching. I know I have one on Instagram or Facebook, but I have to scroll for ages to find that one. So no, I can't find it on Google. No. Oh well, good old days, no? Good old days. Poof. Okay. What program site are you using to draw? This TradingView. Link is in the The link is in the description. You can click on. I mean, it's an affiliate link, but if you want to support the channel, no, there's a link in the description, or you can just Google on TradingView. For the ones that just popped in, Tim is a real life friend of mine. I see him often. What's up, Nadiri? How you doing? How are you doing? And Tim is currently at work. He is designing all sorts of things on his triple screen setup, while also chilling here at the same time. Look at him go. So yeah, if I let me quickly do this, by the way. Let me show chat, right? So Where is Tim? Yeah, look at this guy. Open in a tab. Okay, everyone. Let me check my planning because got stuff to do. Yep. We've been online for a nice amount of time. No, I also always enjoy being live. It's a lot of fun engaging with everyone. But the picture is at your Facebook. Yeah, I know, but I have to scroll all the way to the downside, I think. Oh, wait, no, it might be Facebook, by the way. Lol, I haven't been on Facebook for a long time. Okay. Okay. What is this? I don't want Facebook ad. No, man. Facebook, man, rubbish. Let me quickly... I think I had it as a profile picture, no? Coming. Yeah, there we go. I wasn't teaching here though, but this is where of course we gave lessons. But now, yeah, if I want to get the pictures of the lesson, I have to go all the way down. So it doesn't. But yeah, this is me from you can see me from the bottom, which of course is my best side, as you can clearly see. Yeah, snowboard teacher. Great times together with Tim as well. Great times indeed. Okay, everyone. For the analysis part, because of course we're in the chatting phase as we always do. The beginning is the analysis part of the stream, and then we go into chatting and fun. It's time to continue the day. No, this is not from Chart Champions, my friend. That's absolutely not correct, because many people track statistics about Fibonacci. Including myself. So I have other orthodox Fibonaccis that I use myself as well, which are fibs that others also do not use. And that's the 836, 723, and the 557. These are also fibs that I use besides the 66, for example. So, yeah. I never really enjoy parties that say we developed this. It's the same with things like ICT. It's a nice strategy, but he's not the one that I invented. No, he's the one that markets it. It's been very well known that gaps can act as resistance. I mean, it's been there for decades. So it's just a new little like a new face, a new jacket marketing. Making it sound very difficult, make like 1 hour videos to say like 2 things. Jeez. But no, there's many people that track their statistics, including myself. So but the picture, digging it. Couldn't even use this market speak in real life stuff. Scrolling Instagram to the down. Oh, I know. I know. Since all of like trading and YouTube and all that stuff, it does enter my language. Risk management. I even think I said it to my fiance earlier today. The word risk management, which of course I know it's from trading. Upside, downside, risk. Even in business, I use it as well. But okay, everyone, thanks for hanging out. Got to continue with the day. Got lots of stuff to do. Of course, a new video will be online at 7 p.m. Central European time. Let's hope the market has moved. Tonight at 8 p.m. Central European time, there is news, right? So there's going to be potentially some high volatility. We are now ranging inside this target box, right? At resistance. We've been ranging here for a while. And for the analysis part and the probabilities and all the good stuff, right? Go to the beginning of the stream, because in the first about 20 minutes, that is where I deep dived into the analysis, Elliott Wave analysis on all the different time frames, which I can recommend. Right. So if you're here for that specifically, make sure to check that out. If you have any other questions, make sure to write them in Discord, and I'll try to answer you throughout the day, or put them in the comment section after this live stream, and then I'll make sure to answer you in the comment section, because so far I've been able to answer all the comments since the beginning of the channel, and I'm trying to keep up that streak. So yeah, thanks for hanging out here at least, and I hope to see you guys soon again. So enjoy your days. Enjoy your morning, afternoon, night, evening, wherever you live in the world. And we're going to see each other very, very soon again.